The price of ChainGPT suddenly shot up, and of course there are news surrounding this. The question is, does it still make sense after the elevated price to buy in? Let's have a look at the on-chain metrics most people aren't considering. Let's look at who is long-term buying and selling here. Now we're currently at 32 cents. We are up almost 50% today, and that's all due a Binance listing. So ChainGPT can finally be bought and sold on the spot market in Binance. Now here's something very interesting about the long-term price development of ChainGPT. We had our multiple pumps and dumps, and it seems like there's maybe upside potential to reach 52 cents or so in the price. But here's the thing, we actually have already hit an all-time high in terms of market cap. So the price is not an all-time high, the market cap is. And the explanation for the delta is over here. There is more supply now floating. So ChainGPT had been a highly inflationary token. More and more tokens hit the market over time. This is now gradually changing, and that's probably also the reason why Binance feels more comfortable owning some of the supply for market making. So on launch day, there was only 100 million CGPT tokens. Now there are almost 800 tokens. And yes, the supply will continue to increase, but it's not that bad anymore. The maximum supply is 1 billion. Now, this is not the first video on ChainGPT. And here I want to show you an issue with the YouTube algorithm. So I made a first video when ChainGPT's price just went up. That video outperformed an average video by quite a bit. The average video is here in gray, and this is the performance of that first ChainGPT video, which was roughly 2 years ago. Another video followed that was published roughly 1 year ago. It performed much worse. It still slightly outperformed, but it did much worse. And here we have video number 3, which again outperformed. Now, what's so interesting about this? The video that performed the worst was the same point in time when the price was low. The video that did not do that well was published at 12 cents. And again, now we are at 32 cents. In other words, when the price is going up, everybody wants to search for the token. Everybody has interest. There is a correlation between attention and price. When the price is very low, when it's close to its all-time lows, nobody is interested in watching the video. And so that's why most people lose with investments, right? You want to buy the asset that nobody wants to buy, where nobody has any attention on it. And you want to sell when everybody talks about the token. It's all about being contrarian. It's all about doing the exact opposite of what the masses are doing. Now let's go beyond the price data. Let's have a look at the on-chain data. Let's see at the statistics that we can only get with crypto. Let's see the numbers of sellers and buyers. Let's see the number of whales and retail investors. Let's have a look. Now there are two versions of the token. There's one version on Ethereum with 6,500 holders, and there's another version on the Binance Smart Chain with 63,000 holders. What we've got over here is the number of retail investors on the left, the number of whale investors on the right, and the way we make this distinction is with minimum holding thresholds. So to be counted as a wallet on the Ethereum chain for the chart on the left, the wallet has to hold at least 3,000 tokens. So at the current price, that's roughly $1,000 worth of the token. For the chart in the middle, it's $10,000 worth of the token. For the chart on the right, it's $100,000 worth of the token. Yeah, the same charts for the Binance Smart Chain. Again, small retail, medium-sized retail, and whales. We can clearly see how there's more adoption on the Binance Smart Chain compared to Ethereum. And why is the number of holders suddenly crashing like this? It's because people are moving over their CGPT to Binance directly to trade over there, because there's lower fees trading on Binance compared to directly on chain. Isn't this all fascinating, right? There's not a single wallet cohort, neither the whales nor small retail, that's selling. All of them are buying over time, yet we've seen this roller coaster in the price. It seems like all very solid accumulation. And these massive dumps from 200 million market cap to 50 million market cap, so the 75% decline, all just happened because of tokenomics. It's all just token supply hitting the market. But luckily enough, we don't see that supply expansion in the future anymore. Thus, I don't think we will see similar pumps and dumps in the price that we've seen in the past. Yes, volatility is likely not going to go down, because when Binance owns a lot of the supply, they're also interested in increasing the volatility, right? Volatility translates into trading fees, and trading fees translate into liquidation fees, and they also translate into a lot of revenue revenue for the company. So of course the price won't just be stable at the level, it will continue to fluctuate. But don't think that it will drop again by 70 or 80% unless Bitcoin is suddenly going to crash. It seems like the long-term adoption is still intact, and we can simply forget about this drop here, right? This is simply just wallets transferring their tokens over to Binance. This is not selling. Because have a look at the number of buyers and sellers every day. It seems like most days we see more buyers than we see sellers, and this has not changed in the last days. So that's the chart on Ethereum, and here's the same chart on the Binance Smart Chain. Now here's the thing, there are plenty of topics within crypto that aren't very sexy, but that are, I believe, very vital to make money long term. For example, concepts like correlation. What we see over here are correlation coefficients. Did you know, for example, that most altcoins tend to be more correlated with Ethereum than with Bitcoin? In other words, it's not when Bitcoin goes up that the altcoins go up as well. It's rather when Ethereum goes up, then the altcoins go up as well. Or did you know that the correlation coefficient of the S&P 500 to Ethereum, and thus the altcoin market, is actually quite volatile? In other words, it does make sense to also own stocks, not just Ethereum, not just crypto. The common narrative is that when traditional markets go down, that crypto tends to go down as well, right? That crypto is simply just a levered bet on, say, technology stocks. That's not the case. The correlation coefficient is relatively close to zero. Or do you know the long-term expected returns of various asset classes, of say gold, of say the S&P 500, of Bitcoin, of altcoins? When we don't just own crypto, but we also own property, for example, and we've got that portfolio, what kind of returns do we need in order to beat monetary debasement, but also in order to at some point to get financially free? How much money do we need to have enough passive income to not having to work anymore? What are expected long-term returns, and how much should we actually allocate towards crypto and towards property, towards stocks, gold, bond, etc.? What actually makes sense? When there are tens of thousands, hundreds of thousands, maybe even millions of dollars on the line, not having this properly nailed down is a huge problem. And when the market isn't that great anymore and the upside for Bitcoin could be somewhat limited, how can we still make money? How can we make money from charts like this? What we see over here is Balancer relative to Ethereum. We can make money by shorting this. Balancer has very bad tokenomics, the supply increases over time, and so it tends to do worse than Bitcoin and Ethereum over the long term. And we can make money from that, again, from the relative valuations, not just from US dollar valuations. When we look at how quickly is the monetary base expanding, and we put this into relationship to how quickly are salaries increasing, we actually see that pretty much everybody is falling behind over time. And this is not just true for the poor people, this is even true for the top 5% of earners. By the way, if you earn $500,000 per year, then you are in the top 5%. But yeah, data like this is useful. And those are not necessarily the sexy topics that work well on YouTube, right? On YouTube, it's the 100x altcoin gems that get all the clicks. But when you talk about diversification and correlation, etc., people just fall asleep. But it's the long-term planning, the long-term proper allocation towards different asset classes that actually make the difference. And so have a look at all of this. Those are tutorial videos of the premium membership of this channel. It's down below, thebitcointrader.com. There's more than 100 tutorial videos in total. What are my favorite crypto macro indicators? How do interest rates impact different asset classes? We've just seen how the market got spooked because the Federal Reserve might get more hawkish. Or how do we adjust our returns for risk mathematically, right? Everybody can get more returns by increasing the risk massively, but the idea is we want to get the best returns for the risk. And so there are ways to calculate this using alpha and beta. Those are all very complex topics, but I strongly believe that it's the skilled people, the people that have most knowledge, that tend to make most money over time. Now, besides all of those tutorial videos, there are also various chats in premium where I try to be active as well. So in case you've got any questions, just tag me in a message in those premium chats and I try to reply. The membership is currently $165 per month. This is not for people that only have a net worth of $1,000, right? This is for people that actually have to manage wealth in the tens of thousands, preferably even hundreds of thousands of dollars. There is a 1-week money back guarantee as well. So in case you don't like premium, just message me within the first week and I refund you 100%. There's really zero risk for you. And so does it make sense to buy ChainGPT now at these elevated prices? I believe potentially. I don't think that the price will crash again another 70 70 or 80% simply because the tokenomics are not much better. That being said, the volatility is likely going to stay high because again, there might be manipulation, there might be some leverage coming in with perpetual futures. And so a sensible approach would be to potentially dollar cost average, as in buy a little bit today, buy a little bit after it drops 20, 30%, buy a little bit after it drops a bit more, because at some point the price is likely going to go back up again, because again, the centralized exchanges have now purchased all of that ChainGPT and they don't want to get the price to zero. They're simply just generating volatility, and probably they're going to pump the price when there's not that much trading volume anymore, right? When attention is low. We're going to see the same again when a ChainGPT video launches and nobody watches it because nothing is happening with the price, and when it's the best time to buy at that point in time, that's then when Binance will push up the price, when the smallest amount of people will actually make money from this. Crypto is player versus player, and when Binance is one of the main players in the game now, we've got a pretty strong opponent. Right now, we already see quite a bit of leverage. So in the last 24 hours, we've seen more than $1 billion worth of trading volume on ChainGPT. This will definitely deflate in the next 24 hours. Let's see how much. And in terms of market cap, ChainGPT is still relatively small, right? It's at 270 million, and it can easily do a 2, 3, maybe even 4x from here. There are way larger AI tokens. If you got some value out of this video, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video, or see you in premium. Cheers.